Hi, as part of this video, we are going to look at how to invest in gold using various gold options that are available. Let me pause for the disclaimer. Let's continue. As part of this video, we will look at the asset classes, various forms of gold available, and we'll go in detail in each one of them, and we will wrap up the video with the taxation. As part of the earlier video, we have seen how to invest in equity, how I am approaching it, various details of it we went in depth there. As part of this video, we will look at gold. Earlier, we have seen the asset classes, equity, debt, and gold. This is my target allocation, which is 80%, 10%, and 10% for equity, debt, and gold, respectively. As part of this video, we will go in detail about gold. Gold is primarily a wealth protector, not really a wealth creator here. As part of any game, right, there will be defense players and offense players and so on. Gold is more like a defense player in the portfolio. So these are various forms of gold exist. Here if you see there is a physical gold, then there are like regulated and unregulated gold that are available in the market. Physical gold being jewellery, coins or bars, regulated gold being gold ETF, gold mutual fund and SGB. And there are some unregulated gold products like digital gold available in the market. Let's talk about the physical gold. Historically, physical gold is well known to everybody, right? So it has an emotional attachment. It is traditionally we have exposed to that. It can be easily pledged, and it is very easy to understand buying a physical jewelry in hand and holding that as a wealth, right? So let's look at the downside of the physical gold. So it has high transaction cost and making charges, right? So essentially, when we are looking at buying a gold jewelry, the jewelers add easily two-digit percentage as a making charges or value add. They are adding it in, and there is a transaction cost of GST adding 3 or 5% into the cost. So the other is the purity issue where based on where we are buying and the quality and trust of the jeweler, right? And this is not definitely an investment grade product. So we can go and buy the jewelry only for the purpose of wearing, not really as a purpose of investing, right? So never buy gold jewelry for an investment purpose. If you want to wear the jewelry, feel free to buy them. So let's look at the next one in the category, right? The physical gold. There can be coins and bars which you can buy. Here they come with the purity certifications and so on. And compared to gold jewelry, gold coins and gold bars doesn't have all these additional making charges and so on, right? The wastage and making charges are not there, right? Various banks and jewelers sell these gold coins and bars. You can go and buy from them. Looking at the downside of the gold coins and gold bars, there is a storage risk and cost associated with it. So we have to store it. We have to probably have a locker in house. We have to get the locker hired in the bank and so on. And compared to jewelry, coins and bars have limited pledging facilities, right? And then the buy sell spreads are high compared to other products that are there. So it's still not an ideal product for portfolio building. So let's look at the gold ETF. I would say the best option available for buying gold. So it is backed by physical gold and it is easy to buy and sell and pledge them, and it offers the intraday liquidity. They are exchange traded funds, so they are bought and sold on the stock markets. So look at the downside of it. It requires a demat account and a brokerage firm and a demat account, right? And when you are buying and selling, there can be a slight spread, right? That can potentially reduce some returns. And liquidity is restricted to the market odds. And this is the best option, I think, in my view, because it offers the lowest cost for gold exposure. So let's look at the next option, which is gold mutual fund. Essentially, the gold mutual fund is backed by gold ETF. So anytime we can go and buy and sell, and also option to pledge these mutual fund units. It doesn't require any demat setup, and also it supports setting up SIPs. So the process becomes more seamless. That's where I think compared to ETF, gold mutual funds are having a slight edge. So compared to gold ETF, there may be a tracking error because the gold mutual fund may hold small portion of it in the cash for supporting redemptions and so on, right? So they will definitely not track closely the ETF. There will be some gaps over a long period of time. And liquidity is not intraday. So if you are selling it today, you may get it T+1 or T+2 kind of a liquidity. But still, this is, I think, the second best option for buying gold. If you are not comfortable like bidding and putting a limit order and buying it in stock market, I think this is what you should explore. So SGB is most lucrative product that is there, where we can also get additional annual interest of 2.5%, which none of the other gold product out there in India gives. And it also offers the tax-free capital gains if you buy and hold it for 8 years. And there is no storage or purity issues because there is no gold involved here. It's purely based on the promise what government and RBI is making on the bond. So looking at the downside of it, why I couldn't venture into SGB, the RBI releases SGB in a non-periodic way. So they issue the new bond series at various time. So it's not easy to go and buy as a regular thing. If you take ETF or mutual fund, whenever the salary is getting credited, you can go and buy the mutual fund units, or you can go and buy the gold ETF on the stock exchanges. But whereas a sovereign gold bond, the primary issuance by the RBI is not more periodic. So there is a gap between when you want to buy and when it is available. There is a secondary market also available, but there may be some liquidity constraints there. It may either sell at a lower price or a higher price based on the time and so on. So yeah, it is the limited buy sell is the downside of SGB in my view. That's why I couldn't venture in. And also it has a very long lock-in period in the primary market, but in secondary market we can still go and liquidate them. And there's an early exit penalty where we have to end up paying tax. So we'll lose this tax-free benefit, right? So if we are redeeming earlier. And also with the rise in gold prices, SGB issuance likely to be discontinued or reduced in frequency. It may potentially change in the future. So I'm not going into SGB at all. So even though it's very lucrative and so on, not really picking up this SGB. So the last option in the gold is like this unregulated gold, where there is this digital gold products available across various e-commerce or quick commerce websites or apps. It is much easier to go there and buy them and also sell them, and they provide a convenient storage of storing the gold backing these unit. The threshold of buying these is can be lower with this fractional ownership that these digital gold products are offering. Let's look at the cons of it, right? It's not regulated by neither SEBI nor RBI. It's entirely unregulated entity, unregulated product that is there. And there are no clear rules on the redemptions, and there is a risk of platform shutting down. So definitely do not buy unregulated digital gold. I think you have to figure out a way to go and buy a gold mutual fund, or spend some more time and understand how to go and buy the gold ETF. So if you look at gold ETF, for holding period is less than 12 months, treated as a short term capital gains and taxed at the individual taxpayer's slab rate. But if the gold ETF is like the holding period of gold ETF is more than 12 months, it is considered as long-term capital gains, which is taxed at 12.5% flat. And when you look at gold mutual fund, it's pretty much same as gold ETF, except that the holding period to be qualify for long-term capital gains is 24 months. So in this term, gold ETF is tax efficient as well. If you are especially at a higher slab, right? Buying and holding a gold ETF is much better than buying and like holding the gold mutual fund. If you look at the jewelry, it is jewelry and gold mutual funds are treated the same in terms of taxation, but there is additional purchase tax what we pay, which is the GST, which is like 3% is on the gold value and 5% is on the making charges and so on. So essentially, like in those terms, it adds more like money to go and buy the jewelry, right? From a taxation perspective, it's same, but while buying it, we have to pay more when you are buying jewelry beyond what these jewelers are putting as a making charges or wastage and so on, right? As a summary, right, comparing these three products, I prefer gold ETF for wealth building and jewelry for really buying a jewelry which we want to wear, right? I am Shakti Priyan, sharing my experience of building wealth over the past decade.